Welcome to today's Daily Report Market Analysis videos on Tuesday 3rd of December with me, Richard Perry, Market Analyst at Hantec. There's been a slight stabilisation of markets today. There was a significant move against the dollar actually yesterday afternoon as the ISM manufacturing data really did disappoint, showed the ISM manufacturing data falling further into contraction territory below that 50 line, and that was really did hit the dollar into the afternoon. And what we saw is, look at that spike higher on the VIX as well. So that was coming about as there was a sharp sell-off on equities yesterday, about sort of 0.9 to 0.9 to 1% lower across Wall Street. Question marks around that the sustainability of that run higher that we've seen in recent weeks. Interestingly enough, though, they didn't see too much of a reaction on Treasury yields, just sort of stabilising really, rather than any decisive direction which would have precipitated a significant move against the dollar. So it'll be interesting to see how the dollar now starts to respond. It's edging lower a little bit more today. Euro is basically flat on the day. Dollar yen's slightly higher, but sterling is up against the dollar. And look at this, you got the commodity currencies all benefiting against the dollar as well. Certainly the Reserve Bank of Australia didn't really do much to change the outlook for the Aussie overnight. We had the RBA sitting on its hands pretty much, not doing anything to change the outlook there. But what we did see was current account improving for the Australian economy. So that has helped the Aussie overnight. In terms of this morning, in terms of data, not much really at all, to be honest, today. Only really the UK construction PMI, which has improved a little bit better than expected, but still deep in contraction territory. Not great signs there for the construction industry. Nothing too decisive really to shift the narrative around markets today. Now, in terms of my chart of the day, it's been an interesting one because we've been talking about the New Zealand dollar improving over recent sessions, and we saw that throughout last week as the dollar was strengthening across forex majors. We didn't see the Kiwi under pressure. We actually saw the Kiwi holding ground. Yesterday, decisive upside break above that pivot area, 64.50 to 64.80, key resistance area broken to the upside, and really does complete this as a base pattern, multi-month base pattern of around about 250 pips of recovery. So you could suggest that we're going back towards the 67 area in terms of implied targets. And you look at the strength of the momentum and the confirmation of the breakout, that RSI multi-month highs, MACD lines accelerating higher along with the stochastics, moving on through that resistance and holding the break today. So it really does suggest that the Kiwi is sort of benefiting now against the dollar, and it looking like it's going to test the next resistance band. You got the reaction low from the July low, 65.65, and then that reaction high that we saw as a lower high, 65.85. So that's 20 pips worth of resistance area that is coming into play overhead. And I can see that with the crosshair there. So it's still got some room to go to test that. And I think a move upside, buying into weakness seems to be the way to play. But look at this upside break on the Kiwi and the strength of the momentum you can see here. The decisive shift in sentiment for the Kiwi versus the US dollar. So you'd be looking at buying into weakness. You've got support bands, you've got the breakout levels, 64.50 to 64.80 is supportive. You've almost pretty much seen a retreat back towards that 64.80 level this morning before pushing on again from 64.90. So any sort of weakness near term, I think, that helps to unwind the immediate overbought nature of this chart. As you can see on the hourly chart, RSI well above the 70 mark there for the last day and a half. any move to unwind that, I think it will be seen as a chance to buy, because it looks pretty well set up now. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.